Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, welcome back to YouTube where we're going to be looking at Bitcoin today. First thing I've got to inform you of is the change here on the BLX, the Bitcoin Liquid Index. Now on the shorter term time frame we do all of our charting on this chart here, which is the old Bitstamp chart. This is still ticking forward in time. As you can see, it's relevant to this moment that I'm recording, which is currently the 12th of September. However, here on the BLX chart we've had this little warning symbol come up on TradingView and it says notice of service termination. On September the 1st, 2025, the Brave New Coin API went offline. You can still view historical data even though the BNC charts will no longer be updated. Now what this means is that all of the long-term analysis I've done here, so for example the cycle analysis, we've got bear markets, bull markets, halvings, seasons, all that stuff, and the long-term count itself and everything else all has to be imported, transferred, rearranged, reorganized, redrawn even in some cases onto a different long-term Bitcoin chart. I have not had a chance to do this yet and it's going to take me some time to do it. So if you want to get some kind of long-term view on what's going on via the BLX, you'll have to go back to a previous video called the Bitcoin Primer. That will still talk you through my view on market cycles, on halvings, on seasons, bull markets, bear markets, long-term Elliott wave count, all that stuff. It's still pretty much relevant to this day, so you can go and look at that stuff on the channel. We're going to be carrying on our coverage on the short-term Elliott wave counts shortly in this video, but there's one thing I wanted to clear up why we are here on the old outdated BLX, and that is the market cycle. There appears to be some confusion with the way I've been talking about this, and I may be the cause of some of that confusion. If I am, I apologise. It was not my intent to mislead. But I've had people say to me recently, Tom, you shouldn't measure from the highs, you should measure from the lows. Well, I can assure you, if you go back and watch my videos on this channel for the longest time I've been covering this, that's exactly what I do. My 4-year cycle is measured from low to low, not from halving to halving, and not from high to high. I think what's caused confusion is my finish line marker here, which I've changed the label to potential finish line just to salve any further confusion that could be caused. This is an expectation of a potential top coming in within this cycle based purely off of the length of prior bull cycles within the larger 4-year cycle. It is not confirmation of the cycle. It is not a way of measuring the cycle. The cycle is measured from market bottom to market bottom, and it doesn't break unless that 4-year cycle breaks. Now it might be an early warning that things have changed, but that can't be confirmed till a much later date. So the next market bottom is expected end of next year, from October through December 2026. In the meantime, we may top out within the given expected time frame of a normal bull market, which is normally around October, November, December. We saw a November finish, early November finish in 21. We saw a December finish in 17, and we saw a November finish in 2013. We may see something similar again. We may carry on out into next year and have an extended cycle. There's also the possibility that we have already topped and we're already on our way down. These are all possibilities, but don't get confused. Crossing this potential finish line and not topping out on exactly this date means nothing in terms of the longer term 4-year cycle. This is just a potential finish line based off of prior bull market lengths. We may end up before it, we may end up significantly after it, we may end up exactly on it still, but the cycle is intact unless the 4-year bottom to bottom cycle is broken. And now a quick message which you should listen to before we continue the video. First things first, a very important warning. If I can just take a minute of your time, it's in your interest to listen. There are multiple impersonation scams out there at the moment. The worst example I've come across thus far are people opening trading accounts in my Discord tag name, Greenstar Tom, and using my logo. These trading sites all appear to have the same thing in common, which is they have a copy trader function. This copy trader function allows a person to deposit funds to their account and then assign it to this trader, who will then take fees from your account to follow their trading activity. It's highly likely, in my opinion, they have no interest whatsoever in being a successful or legitimate trader. They are just taking you for the fee. Now, some of these sites may actually be scams themselves, which are working in collusion to scam users, or it may just be individuals have managed to slip through the net onto these sites without being properly vetted. Either way, it is these sites with the copy trading function which appear to be the problem. Just to be absolutely clear, I have absolutely zero presence whatsoever on any such trading site. All of my trading is 100% private. If for whatever reason you come across said impersonators using the Green Star Tom tag and my YouTube channel and Discord logo, they are a fraud and you should report them immediately to said broker or said service. Another scam I am witnessing repeated frequently is the spamming of other Discord servers via direct messaging to solicit people for private information and financial information. This again uses my Discord and channel logo and the Discord tag Green Star Tom. There is only one legitimate Green Star Trading Discord server. The only way it can be accessed is via my Patreon service. I have recently been contacted by some fellow YouTubers who operate in the financial sector and the crypto space, as well as some other traders in the same space, and they have informed me that they have been subjected to the exact same impersonation scams. In other words, you can't trust anybody at the moment, and this unfortunately is likely only going to get worse with AI out there. I've now seen AI voice scams copying people's video content to try and sell them trading courses and other such nonsense. In other words, if it doesn't come from a direct source that's confirmed, do not interact with it in any way whatsoever. So please guys, please be super vigilant and super careful out there. Remember that I will never contact you directly. I will never solicit you for information. Do not respond to anyone pertaining to be me who has contacted you directly. And please, where you can, if you come across such scams or frauds, please report them to the necessary authorities. Guys, do your best to stay safe out there. It breaks my heart to have to say this, because the whole point of this channel is to try and help people, and the idea that people get hurt via an interaction with someone scamming them who's impersonating me keeps me up at night, and it really has upset me, to be honest. So please stay aware, stay safe. Okay, welcome back. Sorry to have to inform you of such unfortunate details about scams and such, but I do insist that you pay attention and that you stay safe out there. And I think I'm probably going to have to include that in every video going forward, because we're always getting new blood coming into this market, and the newer you are to this financial space, crypto space, the more vulnerable you are to these kind of scams. Anyway, I think we should just get straight into the Elliott wave today, okay? Because obviously a lot of you guys on YouTube have been waiting for an update, know that the primary count as it was invalidated at the current smallest wave degree we had within that count. Now, let me reassure you, the long-term primary count is still completely intact, and down to 1 degree higher than the one we were recently observing is still also intact. Now, let's see if we can make sense of all of that, shall we? So let's come into the 8-hour time frame and let's bring up the primary count as it is without this addition to it. Right, so let me explain why we're just looking at this first. Prior to all the work I've done to inform my patrons of the changes we've made to the count and the work we've been doing together and the great contributions made by our community, thank you very much if you're one of them. We had a count which concluded that this was another wave 1 here, and that this was another wave 1 here, and then we were expecting another wave 1 here before breaking out into a series of threes. We can see that the price came below this level, thus invalidating this being a 1 and a 2. It did not invalidate this being a 1 and a 2, except however the lack of a clear 5-wave structure into this high which would elicit a smaller wave degree than this one completing, has now got to the point where I don't think it's viable. So essentially we have rewritten the count from minute wave degree onwards. Everything from minute 1 into 2 is still intact. So the longer term primary wave count is valid all the way up to April of this year. And we have only had to make an adjustment to the primary count from April this year. So I'm clarifying that first because I had people say, oh no, we broke this level, does that mean everything's gone wrong? No, it doesn't at all. We just adjust within the next larger wave degree, and then we assess from there, and if that doesn't work, we adjust within the next larger wave degree and see if that works. That brings us back 2 wave degrees here to minute wave degree. So let's now bring in the addition we've added. The best explanation I can see for a bullish continuation of this wave free extension is for this recent move up to have taken the form of a contracting leading diagonal. We see the wave 1 with 5 waves. We see a 3 wave correction into the wave 2. We see 5 waves up into the wave 3, which is shorter than the wave 1. This is not a prerequisite anymore for a diagonal structure in the latest form of Elliott wave in the latest edition, but in my opinion it is desirable. The wave 4 does come back ever so slightly into the wave 1. This is also not a condition for a leading diagonal anymore, but I also believe it to be desirable. The wave 4 is shallower than the wave 2. This is a strict rule and must be obeyed within a leading contracting diagonal, and it is obeyed here. The wave 5 is shorter than the wave 3 but finishes beyond the top of wave 3. This is a strict rule for a leading diagonal in terms of its length, and it conforms here as well. So we have a perfectly legitimate leading contracting diagonal. It conforms in both legal and desirable elements. There is only one desirable element missing, which is the throw over of the 5th. However, this is not a hard rule and therefore does not invalidate the idea. So this leads us to conclude that the 5 wave move up from the low of April this year now concludes a wave 1 of 1 lesser degree than this prior wave at minute degree. This puts us in to a minuet wave 2. Okay, so that minuet wave 2 may have completed already at the low here at 107.270. We've been marching up ever since. But we may have another 3 wave swing down lower. Now I am leaning in that direction slightly. I'm not going to stick my neck out and say I think it's certain. But given the structures we've seen off of the low, they do appear to be more corrective than impulsive or motive. Now I have managed to force a bullish count in here, and we'll come and have a look at it in a moment because there is a chance that we bottomed here. I think the reason why I'm a bit torn, and I'm not the only one in our own community and elsewhere, is, you know, we were talking just yesterday about how many bullish structures we're seeing occurring in the altcoins. It's some, not all, in some of the altcoins, a lot are going to zero, but we've seen some seriously bullish structures like Sol, for example. We've called that breakout perfectly over the last few days and it's gone flying, right? But it's not the only one. There's a lot of other really impulsive looking, extension looking counts which are very bullish. So that's had us thinking, well, surely Bitcoin's underlyingly bullish as well. Now we don't have to have Bitcoin going up at the same time as altcoins. They can diverge occasionally, but I am kind of leaning at the moment still towards the idea of one more swing lower. Now let me explain as to why. So first things first, from the high here at 124.517 we've swung down to this low here, and from here we've retraced straight back to the 50 to 61.8% golden zone, which is our target area for a retracement. Now we might say, well, B waves can be shallower, wave 2s can be deeper. Yes, so that's why we go for the most likely area to find resistance, which is the 50 to 61.8. It's the most likely area where we're going to find a retracement end in this zone. Yes, it could be shallow, yes, it could be deeper. That coincides very strongly with support and resistance in the region as well. So if we see the specific resistance that we're just coming into now, we're into this little line of these lows here and highs here and these lows and highs here. Yeah, there's several in this region, you know, highs as well, back tested highs, resistance becoming support, so on and so forth, support becoming resistance, and we're roughly back in this region now, and that coincides with this 50 to 61.8% retracement. Okay, So it's not guaranteed we're going to turn and go lower, but for the moment this appears to be more three-way structure than 5. Now if it morphs into 5, that would be very bullish. Okay, and we get through all of that resistance, this was likely an impulse coming out of it, but for the moment we have a three-wave move back up, and therefore anticipating, as part of a double zigzag, a three-wave move lower to somewhere between roughly 90 to 100,000. So we're looking for maybe a 50% retracement of a larger time frame, which is 99,000, but a one-to-one extension is 100,000. This is the W from the X projected to find the Y, or any of the potential third wave extensions, because although it's not a wave 3, it is a third wave. You know, C waves and Y waves are third waves, and therefore they can extend. So the 123.6 down to 1618, and then of course you've got the 61.8% retracement of the golden zone. So I'm basically saying 90,000 at the 1618, 100,000 at the top end, 10 grand region. I know it's a pretty wide margin, but we are talking about an asset which has come up from $15,000 at the end of the last bear market to 124,000. So it's not that big a margin. But you take my point. So there's the more likely case, what I believe to be the more probable case, that we will now continue lower in a third move down. I know this is conflicting with some of the behaviour of the altcoins we've got at the moment, but I'm presenting to the price to you as it is at the moment. I have this free wave move back into the target zone. I have this corrective channel that we're moving in. I have this one-to-one measurement of the Y from the B in this triangle to the Y to the 1 here. And that creates a perfect one-to-one situation here. Sorry about that, as my son just popped in to say hello. Excuse me. Anyway, so we've just come up here, and this is this length of the W projected from the X to find the Y. So we've got a one-to-one here. We've got the 50 to 61.8% target zone here. We've got this long-term resistance here. So we've got every reason to think we're going to pivot here and come lower. Now, we haven't yet, so I can't say that we will. It's just, if this is 3 waves until it's 5, so just bear with me guys, because if it goes ripping to the moon now, I know some of you are going to go, oh well, you thought it was more corrective. It's like, I can only present to you the evidence at the moment that it's presentable. Okay, so we've said all that. I think we're probably going lower, but if I am wrong, there has to be an alternative idea, so let's look at that. I have had to hold this chart down and do things to it that nobody should not be spoken of to anybody else, because it would get me into trouble. But this is what we've had to do to this thing, and it's absolutely grotesque, really. So we're going to use the same idea down. It's just an ABC, and the way we can use that is the impulse going into the diag, I think, was the most popular idea. It doesn't really matter. We can get 5 waves down through here as a diagonal. Okay, and that's how we conclude the counter here. And this is an ABC, and now the bottom is already in. This has got a really ugly look to it. How we come off of the low. Now, I have caveated this statement, or caveated this situation multiple times before by saying that lows in crypto markets can be extremely ugly and difficult to read. Right? They often catch people out. So, with that in mind, we're basically going to force fit, and it is a force fit. Okay, we've made it obey the rules, but structurally it's very ugly. We have a leading contracting diagonal off of the low into a wave 1 at micro degree, down into a 2. We have another wave up into a wave 1, ABC back into a 2. We can even add a bit more detail in here if you like. Into minuscule, yes. And then now we're working on 1, 2, 3, 4. I don't even know if this is the 3 and 4 at minuscule degree in yet. It might be here and forming now. But we're now in this move up. Okay, it's not particularly pretty. It's not channeling very well at the moment. This is because I haven't been able to continue to extend overlapping 1s and 2s. If I could probably point to a better channel or a better pitchfork, but it's not terrible. So if I were to take a base channel along the low, we end up with that same corrective channel we've been working with, except we're going to label this base channel because in this scenario we're expecting the price to come out and come back and test it and then move higher, as opposed to stop here and go lower. So that's the bullish count. So I'm not going to discount it. It's an alternate idea. And if we continue higher and continue to break out of this channel, then we're gaining some evidence that this might be correct. So on that note, let's bring up the primary idea first, going lower. If we continue to progress through this target zone, through the 50, through the 61.8 and continue higher, we're strengthening the bullish alternate that we bottomed down here. We get through this resistance that we've seen prior and we back test it and continue to move higher, we are also strengthening the bullish case off of the low. If we continue to extend and clearly produce 5 waves up, we would have to we'd have to go along with our count here of this 1 2 1 2 1 2, okay, and then we can point to 3 4 and 5. We get 5 up, it's going to look much clearer. That's what we're looking for. And if we go above 1 2 4 5 1 7, this is completely wrong, and we did bottom down here. That's all great. So if you want to play it from here and you want to believe it's long and you want to believe that you should be long and we're going from here, then you've still got a reasonable margin of less than 8%. Now when I first covered this yesterday, it was closer to 5-6%. It's getting further away over time. Okay, if you want to short it from here, you either wait for a move down to form and the STS back, as we call it, so you can short from this high with a very small margin, depending on where you find your entry point. It could be 2%, 3%, 4%, or you can short from the current highs, which are all the way back at here. Now I'm not telling you what to do either way, but it's 8% either way at the moment. We're back at the 50% retracement. It's roughly the same level of risk, long or short. But either way, there's the 2 counts of the primary. I'm leaning towards it going lower, but I'm totally open to this becoming 5 rather than 3 and breaking through all of this resistance, but it hasn't done any of that yet. So there you go, that's the updated primary count. So now let's look at some alternative ideas, shall we? Put these things away inside of here. Okay, so what have we got next? Well, let's look at the alternate count, the bearish count. This isn't an alternate bullish count, this isn't an alternate bearish count, this is the alternate to the current primary, which is the market has already peaked. Okay, it's probably not something people want to consider, and I've had an earful from some people saying, Tom, I thought you were super duper bullish, how dare you consider the possibility of the market topping? I consider any possibility, that's my job as an Elliottian, to consider probabilities, right? This is an alternate, it's not the primary, right? But it is a possibility. And it is invalidated if we make another high at 124 spot 56. So the way we can look at this count is the structure from the lows of August 24 is an ending diagonal of a 5th and final move up within an intermediate wave 1. So we've come up as a 1, a 2, a 3, a 4 and a 5, and the market has already peaked. And now we are coming down in a huge ABC, down to 50 grand-ish, 50 to 70 odd thousand, right? The orange line that you can see along the bottom suggests the possibility of a recent low coming in and the same idea playing out for one more leg higher. That's the orange count, 1 2 3 4 and 5, and we come up here, right? Now this is going to be limited by the length of the wave 3 as to how far the 5th and final move can go, even if it's to throw over the ending diagonal. So if we were to take the length here and project from the recent low, it gives us a cutoff of $157,000. So if we're in the 5th and final leg up in this alternate count, the orange count, we could go as high as 157,353. Maybe a little bit lower, definitely not more. Okay. If the count has already concluded, the market's already peaked and we're going lower. Right, in which case we're going to form a huge zigzag, most likely a zigzag down, and we're probably going to start with 5 waves. So 1, 2, 3, 4, 5, A, B, C, like that. Maybe this is the first one and the 2 that we're witnessing now within this correction. If this is the case, this is going to break down violently and will confirm the bearish case. So given enough time, we'll start to confirm the bearish case. If we now reverse from here and go to all-time highs, it's either the primary count, which is much more bullish in this, 1 2 1 2 1 2, so on and so forth, or it's this, and we have 1/5 and final leg up to 157k or less. Could be considerably less, could be 130. Right, but we have one more all-time high in us, and that would form, instead of 1 2 3 4 5 to here, it would be forming 1 2 3 4 5 to anywhere beyond the previous all-time high. Could stop at a moment's notice. So right, I have got several other accounts we could look at. I've gone over some of these with my patrons on the Discord, but I don't think there's any real benefit to doing that today. I want to just focus down these two simple options. So let's do some summing up now before we go. If we come back in onto the hour chart for the moment, bring back up that primary count. So the first option within this primary count, and the one I'm leaning towards purely from a technical point of view of what we've seen thus far, 3 waves up within the corrective channel, 1-to-1 extension, W from X to Y, 50 to 61.8% retracement back into resistance. I'm leaning to a higher probability until proven otherwise that we've done 3 waves up and now we're going to come lower. There is an alternative though, that we've yet to produce those 5 waves up, and that is what we're doing now, and we're marching our way up like this. This is much more bullish than the suggested low is already in place. Okay, so that's the bullish case. And then we've got the alternative, which is the very, very bearish case that the market has already topped. We just covered this a few moments ago. A completed ending diagonal into an intermediate wave 1, and now we're coming down in a huge zigzag to anywhere between $50,000 and $70,000. There is the alternative in this count also, the orange count, that we've just completed a wave 4, and now we're going to swing higher in a wave 5, taking us above the all-time high of 124,517, and this wave 5 could stop at any moment beyond 124,517. However, it can't go beyond the length of the wave 3 within the ending diagonal. So if we were to take a measurement from here, I know we've already measured this. I think it was somewhere around 155, 158 it says here. It might be a little bit lower than that, 157, but it's in that region. We can't go higher than that. The 5th wave cannot go beyond the length of the wave 3 when in a contracting diagonal, but it could stop at any time. And there you go, guys. That sums up the primary and the alternate counts. We're in a little state of flux at the moment. Like I've said, lots of bullish structures out there coming off of this low in the altcoin market. You have to ask yourself what you believe at this moment. Do you believe that Bitcoin can correct while the altcoins rally, or do you believe that they have to be in sync? If you're convinced they have to be in sync, then you should be long off of this low and back in the altcoins and Bitcoin. If you believe that they can, then maybe, well, you don't have to do anything. You could be neutral. You don't have to be in. Okay, or you could just continue hodling if you've got half a brain, right? Because the long-term win, the long-term strategy now since 2009 onwards has just been to do that and pay more attention to the longer term cycles and the bigger dips than to constantly trade the shorter term. It sounds like I'm talking against my own best interest being a trader, but I'm also a long-term investor and a hodler myself, so I know what works, and in volatile markets sometimes smoothing out the volatility over the longer term is the better option. But that wouldn't be half as much fun as mucking about with Elliott wave all the time, would it? So I hope you enjoy that too, and you keep coming back to the channel for that reason. So anyway, I'm going to leave things there, guys. I know we haven't done any classical analysis today, but I'm on a pretty tight schedule, so I'll have to get back to that next time I see you. In the meantime, please be careful, take care of yourselves, be cautious, as I mentioned in that warning earlier. And if you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you're interested in learning Elliott wave for yourself, and gaining access to a whole bunch of other trading materials and educational materials and a great Discord community where we can discuss all these ideas, there's a link to my Patreon in the description box below, and that'll give you access to all of that. Alright then, guys, take care of yourselves. I'll be back here as soon as possible. All the best. Bye.